Silver just crashed more than 30% in less than 48 hours. Let that sink in for a moment. This isn't a normal pullback. This isn't a routine correction. This is the kind of move that shocks even veteran traders. The last time silver moved like this, entire markets were forced to reset. And right now, investors everywhere are asking the same question in silence. What just happened, and what happens next? Welcome back to Silver Pules, where we cut through the noise and focus on what actually matters in the silver market. If you're watching this right now, you're probably feeling confused, worried, or even a little angry. And honestly, that reaction makes sense, because a 30% crash in 48 hours is not something most people ever expect to see in their lifetime. Before we go any further, take 1 second to like this video and subscribe to Silver Pules. It really helps the channel grow and make sure you don't miss critical updates like this, especially during moments when the silver market is moving this fast. Now let's slow this down and walk through what's really going on, because panic is expensive and clarity is powerful. Silver didn't just fall, it collapsed. Prices sliced through levels that had held for months, even years, as if they weren't there at all. Support zones that traders trusted were wiped out in hours. Stop losses were triggered back to back. Margin calls hit hard. And suddenly, what felt like a stable market turned into chaos. But here's the part most people miss. Crashes like this don't come out of nowhere. They're usually the result of pressure building quietly over time, until one event finally pulls the pin. For months, silver was trading in a tight range, while everything else around it was flashing warning signs. Interest rates stayed high. The dollar stayed strong. Liquidity in the futures market kept thinning. Large players reduced risk, while retail investors stayed hopeful. On the surface, nothing looked dramatic. Underneath, the structure was weakening. Then it happened. A wave of aggressive selling hit the paper silver market. Futures contracts were dumped in massive volume during low liquidity hours. Prices fell so fast that buyers couldn't step in. Algorithms took over, forced selling, fed more selling, and within 2 days, silver was down more than 30%. This is where emotions take control for most people. Fear tells you to sell at the worst possible moment. Shock makes you freeze. And confusion makes you listen to the loudest voice in the room, even when that voice is wrong. But here's something important to understand. A crash does not automatically mean silver is dead. In fact, historically, some of the strongest long-term moves in silver started right after moments like this. If you look back at major silver crashes in the past, they almost always followed the same pattern. A sharp, violent drop that shakes out weak hands, followed by a period of silence, and then a powerful reversal when supply and demand finally reconnect. Right now, the paper price of silver is telling one story, but the physical market is quietly telling another. Across the country, premiums on physical silver are rising, not falling. Availability is tightening. Dealers are seeing strong interest from long-term buyers who are not panicking, but preparing. This disconnect between paper price and physical demand is one of the most misunderstood parts of the silver market. Paper silver can be sold instantly, in unlimited quantities, with leverage. Physical silver cannot. When fear hits, paper prices can collapse far faster than real-world supply can respond. That gap is where opportunity often hides. This doesn't mean prices can't go lower. They absolutely can. Volatility like this rarely resolves in a straight line. There may be more pain ahead, more headlines, more emotional pressure. But it does mean this move should be viewed with a calm, strategic lens, not pure fear. Another key factor here is positioning. Before this crash, speculative long positions in silver were elevated that made the market vulnerable. When selling started, there was no cushion. Once those positions were flushed out, the selling accelerated violently. That's exactly what we saw. Now ask yourself this. If everyone who wanted to panic sell has already done so, who is left to sell? This is where markets often change direction, not because the news gets better, but because the selling simply runs out. Silver is also deeply tied to industrial demand. Electronics, solar panels, medical devices, and green energy all rely on silver. Those fundamentals did not disappear in 48 hours. Factories didn't shut down overnight. Demand didn't vanish. What changed was sentiment. And sentiment is the most unstable force in any market. One of the biggest mistakes investors make is assuming the current emotion will last forever. Fear feels permanent when you're inside it. History shows it never is. At Silver Pules, our goal isn't to hype or scare you. It's to help you see the full picture. A picture right now is messy, emotional, and uncomfortable. But it's also familiar to anyone who's studied past silver cycles. Markets don't punish everyone. They punish impatience. If you're over-leveraged, this move hurts badly. If you're short-term focused, it feels like the end of the world. But if you're long-term, disciplined, and prepared, moments like this are where decisions matter most. This is also why risk management matters more than predictions. No one can time the exact bottom. Anyone who claims they can is lying. What you can do is avoid emotional decisions, avoid chasing price, and avoid letting fear force you into actions you'll regret later. As we move forward from here, volatility will likely remain high. Silver may attempt a bounce. The bounce could fail, or it could be the start of a larger recovery. The key is confirmation, not hope. Watch how price reacts at major levels. Watch volume. Watch how quickly dips are bought. Watch whether physical demand continues to strengthen even as paper prices fluctuate. These signals matter far more than dramatic headlines. If you found value in this breakdown so far, make sure you're subscribed to Silver Pules. We focus on clarity, not clickbait panic, especially when markets are this unstable. The truth is, silver has always been a market that tests patience and emotions more than logic. It moves fast, it moves hard, and it doesn't give second chances to those who act without a plan. This crash will be remembered, not because it destroyed silver, but because it revealed how fragile confidence really is when leverage and fear collide. What comes next will separate emotional reactions from strategic decisions. Near the end of this video, I want to hear from you. Do you believe this crash is the final shakeout before a recovery? Or do you think silver still has lower levels ahead? Drop your thoughts in the comments. I read them all, and your perspective helps shape future videos. And if you think someone you know is watching silver right now, confused or panicking, share this video with them. Sometimes a calm explanation is more valuable than another dramatic headline. No matter what happens next, remember this: markets move in cycles. Fear feels loud at the bottom, confidence feels loud at the top, and the hardest moments to stay calm are often the most important ones. Thanks for watching Silver Pules. Stay sharp, stay patient, and I'll see you in the next update.